Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The auto space now, particularly the commercial vehicle space, the government has revised the new axle load norms. In fact, there was one new amendment. The government has now come out with a notification saying that the maximum safe axle weight in single axle with 2 tires has been changed from 7.5 to 7 tons, and no fresh approvals will be needed from the ARAI for the increase in the gross vehicle weight. Vinod Dasari, the MD of Ashok Leyland, joins us now on the phone line to talk about that. Mr. Dasari, good morning. Since the last time we spoke, there have been a few clarifications that have come through. But in all, do you think that all the confusion has been cleared, or do you expect any more clarifications from the government?
Thank you, Sonia, and good morning. I think let me provide the clarity that I was trying to provide to the media as well as to the investors, because they were somehow spooked by this comment that was, or this new regulation that came. I hope by now everybody realizes that 60 to 65% of the vehicles don't even have any impact on us because they are volumetric. They like oil tankers or car carriers or white goods and so on. And for the balance, 30 to 40%, the assumption was that they were already overloaded anyway. So I don't see any impact. But nevertheless, assume that they were not overloaded and now they will overload to the new level, which was previously 25%, is now only 15%. So I expect the impact to be about 3 to 4% only. That's the first thing I wanted to clarify. Second is, it is still not clear whether existing vehicles are allowed. As far as we know, it is vehicles that have been produced but not sold which are allowed to have this norm, because vehicles that are in operation, there is no way for the OEMs or insurance companies to allow for a higher norm than previously regulated. OEMs have written to the ministry saying that existing vehicles that are already in operation, we will not be able to guarantee the safety on them because the customer might have modified them. So there is lack of clarity on vehicles that are in operation. Yesterday, the regulation that came showed clearly that the vehicles which are produced and yet not sold, that we are okay with, and it doesn't require ARAI approval, so I'm happy with that. So that is a clarification that has come. Previously, people had sought 25% increase and the entire industry would fall. First of all, it is, again, I repeat, it doesn't affect about 2/3 of the market, and even on the balance, it only affects by 15% in the worst case, which means a 3 to 4% impact for the full year. Okay. But nevertheless, I remain bullish for the full year, as we had talked earlier, Shoni.
Yes, in fact, that was what I was coming to. You had earlier guided for a 10% volume growth for FY19. Would you look to revise it higher, given that, one, this confusion is now out of the way, there's hardly any impact, and two, we have seen an improvement as far as freight demand is concerned?
Yes, I think just this confusion that was created dropped our share price substantially, and for all the associated companies, including banks, for some reason, because it was just a confusion. It doesn't mean 20 to 25% drop in the market. It actually translates only to about 3 or 4. But last 1 week or so, I've traveled extensively throughout the country, met all our dealers and all our frontline people, and I must say that the demand is very strong. Usually, 20% of the demand in our industry comes directly from infrastructure. Indirectly, maybe about 30%. Right now, it's about 40%, and we just can't meet that demand. I mean, just our company would have lost at least 1,000 vehicles a month because we weren't able to produce fast enough, even though we had forecasted a higher demand. So infrastructure is driving a huge demand. The second part of the demand is that because of GDP, now with the festive season coming in, and the government having reduced the GST rates on white goods. By the way, white goods, e-commerce, car carriers, cars and scooters all get transported only by trucks, and none of that get affected by axle load. So as such, I expect an increase in demand. In fact, I was revising the growth norms from about 10% that I had previously stated to you, Sonia, that I think we will grow at least by 15%.
Oh, that's
just for this.
That's a big headline, sir. That's you're saying sort of 10% growth this year.
I'm not shooting for a headline. I'm telling you what I heard in the market.
Okay.
I think if you want a headline, next year will be 30 to 40% growth, in my opinion.
Okay, so that's for the industry as a whole. Good to hear you sound as bullish as ever, sir. For Ashok Leyland, what might this translate into
top line headline revenue growth for FY19? Maybe some sort of a band that you can give us to work with?
I know you guys always try to pin me down to a number on revenue and a margin, but the revenue growth will be faster than the TIV growth by almost a factor of 1.5, because the number, it's no longer relevant just on the number of trucks, because the types of trucks we are making are bigger and bigger. And you will see 2 launches happening from us. The first one will be in end of this quarter, which will be the world's first 5-axle truck that can now carry, that can now lift 4 tires. It's never been done anywhere in the world before. So we are launching that. We had showcased that. So that will change the industry dynamics quite a bit and give us substantial revenues and hopefully market share also. And we are also launching a whole range of high horsepower tractors and tippers. This is required for the infrastructure demand, and this will continue for 4 or 5 years. I don't think this is like a short-term thing, pre-election thing that people had said. Nobody can build a road that fast. The number of contracts that I'm seeing is huge.
You know, your words are really moving the stock quite a bit. I mean, look at the intraday chart now, 1.5% higher on Ashok Leyland. So I just want to revisit what you said. The growth guidance for the industry from 10% earlier, you're saying it could be 15% in FY19. And you're saying a 30 to 40% growth is what you're expecting for the CV industry in FY20? Or is that over the next 2 years?
No, in FY20 alone. You look at, Sonia, in all the markets where they have gone to Euro 6, and look at the pre-buy. The pre-buy that happened for India for BS4, that means in the year before we got into BS4, is very small compared to the pre-buy I expect before BS6 comes. Remember, BS4 increased the cost by 4 to 5%. Whereas BS6 will increase the cost by 10 to 15%. As such, there will be a tremendous pre-buy. All the countries in the world have had 30 to 40% pre-buy before BS6. Now, what's happening, interestingly, as I met the customers across the country, they're saying that when it was the BS4 pre-buy, there was so much demand, you guys ran out of capacity and you increased prices. So I said, obviously, if the demand far surpasses supplies, we'll increase prices. So they said, why not buy it now? Because now we will be allowed to use the vehicle at least for 20 years. And I don't have to deal with the BS6 cost increase or the potential price increase of this pre-buy. So I think that is also going to add to our demand, but that's difficult to state how much. That's the icing on the cake.
So in order to service this new demand or this fresh incremental demand, especially that you're seeing from the infrastructure space, would you at any point look to increase capacity?
I think we are already doing that. In May, we had to take a shutdown of our plant because we doubled maybe 70% increase in our paint shop capacity. We've added quite a bit of capacity over the last 1 year in the higher models. A lot of work has been done with our supply chain. So I think capacity internally will not be a constraint. There will be some capacity constraints on certain models. We already face today of very large trucks where the supply chain is a constraint. So we're resolving all of those. Like I said earlier, if I had the supply chain capacity, I think I could have easily sold 4,000 more vehicles in the first quarter itself. We've resolved that in July, and you can see our July market share jump back up to 33% or 34%. I forget exactly how much it was. But in the first quarter, if I had sold those 4,000 vehicles, I would have had my market share also. Because those are customers waiting for our vehicles. They paid for us, and since we were trying to serve that demand, we also lost out a bit on the export orders too.
Okay, so how far away are you from putting in fresh money on the ground? Because the sort of business outlook you're talking about is very, very heartening. I mean, for your shareholders, I think for the economy in general. So fresh capex.
We are continuously putting in capex. We are continuously putting in capex. I had previously said that we will have to put in somewhere in the neighborhood of 1,000 crores in the next couple of years, but half of that is for capability building. We are launching a whole new range of LCVs, completely new range of LCVs, which straddles the whole. Today, our LCV is only 2.5 ton, right? and we have one vehicle at 7.5 tons. So we'll have a full range. For the first time, our LCVs will be LHD also, so I can export, which is a much bigger market. So there's a huge upside for LCV. I mean, I think our LCV should be about 5 times where it is. So we are putting in for that. We are putting in for electric vehicles. We are putting capex for modular vehicles. We are putting capex for Euro 6. So about 60% of our total capex will probably go for capability building. 40% will go for debottlenecking and adding more capacity to our plants. I don't think we'll build a brand new plant, but I think we will certainly enhance capacity.
Okay, that's quite a bit of, an incremental upside that we're looking at. For the LCV segment, particularly, Mr. Dasari, this month has also been exceptional for you. I mean, your LCV sales have gone up almost 50%. Now you're sitting at 4,200 units per month. Do you think in the very near term, this kind of run rate is sustainable?
Absolutely. I think, we acquired the LCV shares from Nissan in October 17 and October 16, sorry, and we have turned around the company. It was loss-making. Now it is one of our most profitable business units. It's growing at a CAGR of about 25-30%, and this is by having only 1 or 2 models. What I expect by April 2020, when along with BS6 will come this new range of products called the Phoenix range, that's our codename project. It will be the new avatar of Dost, and entire range from 2 ton to almost 7.5 ton. We will not make sub 2 ton, but I assume the volumes will be substantially higher. And this will be for the first time. Today, I cannot sell a Dost in Middle East, for example. So that will give me an opportunity to increase that also. So I am assuming a substantial increase in LCV demand for Ashok Leyland, where we have continued to gain market share, even with just one model.
Okay,
Mr. Dasari, thank you so much for joining in.
And by the way, I just found out that we have won a order in Bangladesh for 300 double-deckers under Indian line of credit. So we are the only company in the world that makes double-deckers, Sonia, in case you're looking for a headline.